Good morning, folks, and welcome to our webinar, Preparing for COVID-19 Recovery, Loan Options and Forgiveness Strategies. I can't believe it's October 1st, 2020, and yes, this is our update. So this webinar is powered by Sachs LLP, Sachs Wealth Advisors, and S2 Solutions, which is our technology group that we've been telling you about. Check out our website. I'm sure many of you know who we are, but just in case, want you all to know us very well. This is our caveat that we are required to say before each webinar that our firm provides this information for general guidance only, and it doesn't constitute the provision of legal advice, tax advice, accounting service, investment advice, or professional consulting of any kind, which means, folks, that you need to consult a professional tax, accounting, legal, or other competent advisor for your specific situation. But as we've said in the past, we'll say again, we're here for you, so give us a call with your specific questions. Here's our illustrious recovery task force. We haven't changed pictures in a while. Myself, Josh, and Steve, who are going to be the panelists for today. Okay, so here's the agenda. Besides the introduction that I just spoke to you, we're going to have an update on the stimulus package. We're going to talk about furloughed employees. That's a question that still comes up from you folks due to COVID-19 email. And PPP loan forgiveness perspectives. We're going to give you the three faces, the borrower, the lender, and also the advisor, the CPA. And then we're going to talk a little bit about the PPP loan forgiveness tool. And with that, I'm going to give over the presentation to my partner, Steve. Steve, take it away with some updates.
Thank you, Todd. Hope everyone is doing well this first day of October. I echo Todd's sentiment. Hard to believe we're at October 1st, but it is a beautiful day. So with that, we will move on, and you'll find hopefully that this update is literally up to the minute. But just going back into the earlier in the spring and summer, the stimulus talks were halted after the Democrats and the Republicans could not agree on an additional stimulus package. Back in May of this year, the House had issued the HEROES Act, which was around $3.4 trillion, while the Senate had subsequently released the HEALS Act, which provided for around $1.0 trillion in relief. They passed each other's wings of the Congress, but couldn't get through the other side. So the stimulus talks kind of halted at the beginning of September. The issues were state and local funding, liability protection for workers and employers when people do start going back to work completely, stimulus payments, tenant and homeowner assistance, the unemployment assistance. This was the $600 additional stimulus or additional unemployment benefits that expired in July. There's been differences in terms of the subsequent amounts, testing and contract tracing, and then tax credits and incentives. And just as a side note, there has been bipartisan support for a PPP 2.0. So what that will look like, and if it does come to pass, we'll see. But it's something that at least both sides of the aisle, so to speak, are interested in. So hopefully there'll be some additional relief for certain borrowers. So just this week, House Speaker Pelosi and the Democrats released a $2.2 trillion package. Again, narrower than the original HEROES Act, but not expected to pass the Senate. The highlights, which are listed here, again, state and local funding, that seems to be a real big sticking point between the Democrats and the Republicans as to how much state and local funding actually will be out there. Again, this version of the HEROES Act includes the stimulus payments and the including dependent payments, the unemployment assistance, and you see some of the other areas, specifically industry aid for airlines and restaurants, to industries that are particularly suffering, but other items here as well. And this may have just been seen as a way to stimulate talks once again, but it looks like it has worked because Secretary Mnuchin said just yesterday that the White House plans to make basically a counteroffer. It's going to be a $1.5 trillion package, and that could be agreed upon as soon as today, White House, Senate, what have you. So it looks like there is impetus to continue to negotiate. Now, again, a $2.2 trillion package versus $1.5 trillion, that's still a fairly sizable rift, but not as big as it was before. So we'll see, hopefully something can get passed and borrowers and industry people can get some additional funding as we look to move past the pandemic. So we will keep you posted on that, but definitely something we'll all want to be paying attention to, especially as we move further along into election season. So as Todd had mentioned, one of the issues that has come up fairly frequently is how are furloughed employees treated? Does furloughed mean terminated? Does it mean temporary? So we're just going to go over our interpretation. Again, the SBA and Treasury haven't really come out with guidance specific to this, so this is our interpretation, something we'll continue to monitor. So we just want to give a recap what the difference between furloughed and terminated is. We see those terms kind of used interchangeably. There really are differences. A furloughed employee is temporarily laid off with the plans to bring them back. They generally do not collect wages, but are kept in place for benefits. And we understand that each state may be a little bit differently, so these are general terms. A terminated employee is permanently dismissed, and that's when the wage and benefit period generally ends, understanding that severance could be paid out later. But there are other factors such as COBRA when people are looking to extend insurance beyond the termination period. So the issue that has come up is how are furloughed employees treated for purposes of FTE reductions and or salary reductions. So that's really the main question. So we're going to again go over on the next slide the rehire exception summary. So we'll go over that, we'll go over the salary, and then we'll kind of tell you where we stand on this. But absent meeting one of these exceptions, when you have a reduction in your headcount, you may be subject to a reduction in your loan forgiveness, even if you spent all your proceeds. So even if you received your loan, which is based upon 2.5 months of payroll, and you use a 24-week period, chances are you are going to expend all your funds. Is it on payroll? Is it on non-payroll cost? That remains to be seen, but most likely you still are going to expend all your funds. So the issue now really becomes, did I have a headcount reduction? Did I have a salary reduction? And if so, how do I deal with it? So again, going back to these rehire exceptions, if you can meet one of them, then even if you did have a reduction in your headcount, it wouldn't have a negative impact on your forgiveness. So they're listed here. You can restore employees terminated or furloughed between February 15th and April 26th by the end of the year, or maintain written documentation for employees meeting these 4 criteria. So fired for cause, voluntary resignation, or voluntary reduction in hours, and people who refuse to come back. And if they don't meet that, there's these 2 safe harbors. They're listed on the next slides. The safe harbor 1 here is just an inability to rehire similarly qualified people who were employees as of February 15th by the end of December. And on the next slide, this long safe harbor about how you're not able to get to pre-February 15th operations due to COVID reasons. And this is a fairly broad exception, so it's definitely something that impacted borrowers are going to want to consider. So on top of the exception summary, on the next slide, we go over how the salary reductions work. So if you have a reduction in excess of 25% of an employee's salary, and these are new 2020 employees or existing employees not paid more than $100,000, then you basically compare their wages from the first quarter of 2020 to the covered period, and you do a reduction on a per employee basis. So this is where the FTE headcount restoration is based on strictly a number. You don't have to bring people back person by person. The salary reduction is done on an employee by employee basis. So if you could go back 1 slide, please. To ensure that borrowers aren't doubly penalized, the salary reduction, wage reduction only applies to the portion that is not attributable to the FTE reduction. So basically, this protects you from saying, okay, I reduced someone's hours, but if their rate of pay remains the same, then I don't have to go through a salary reduction and an FTE reduction. I just look at the FTE reduction, and they'll understand that there's a lot of terminology being thrown about here. But bottom line is our position that if somebody is furloughed, that is not a reduction in salary, it is a reduction in hours. That, again, our position, nothing official has come out with it on this, but if that is the case, then you would just look then, okay, I had a reduction in hours, look at my FTE count, and how does that impact me? Did I have a reduction, or do some of the previous exceptions apply? So again, something that may not be that common, but if you do have furloughed employees, reach out to your provider, reach out to us, and we can walk you through our position on this. So with that said, I'm going to now turn the presentation over to Josh, where we're going to go over loan forgiveness, timing for application, and what we've heard from a borrower, lender, and CPA's perspective. So Josh, take it away.
Hey, thanks, Steve, and good morning, everybody. And just to reiterate what Steve said, because it is so important, and this is really where the majority of the questions have come into us, is that, make sure you understand what the FTE exceptions are, because they apply in many, many cases. So a lot of times I know people are quick to hit the panic button, but it's important to think it through and have a discussion with us, certainly regarding your situation. So from our perspective, as the clock turns from October 15th, we'll get through all our tax returns and on, we anticipate a tremendous amount of questions regarding the timing and the filing of applications. So what it is we tried to do was put ourselves in your shoes and look at this from 3 different perspectives: from the borrower, the lender, and from the accountant. So we wanted to, again, take the position from your shoes, saying, okay, here I am at this point in time, what am I thinking? And kind of talk through the issues from all 3 points. So I'm going to start with the borrower perspective. So certainly, we've been in COVID. This whole PPP process has been forefront in my mind. It's been a giant pain. I can apply now. I want to put this behind me, right? So this is very common response from the borrower's perspective. A lot of people want this off their plate, forgetting about the rest of the ramifications and the impact. And I think the message that will come out of this, and certainly if you talk to the 3 of us, our perception is still very much to wait. So the next real common things that people believe is that if I apply today, I'm grandfathered in against any potential future changes. I don't believe this to be true. I think if we saw anything from the application process, is that as things change, the applications will change. So I don't believe that if you submit your application today and the rules change later that negatively affect you, that it won't affect your application. So again, I don't believe that applying today prevents you from being impacted from anything in the future. The next thing, and Steve kind of touched on it in the beginning, is if they release PPP 2.0, do I have to apply for forgiveness for PPP 1.0? It's a great question, and there are no answers. It's very possible that many of you are still sitting within your covered period, and if this does get released in the next couple weeks, possibly, that you may still be in the first covered period for your first loan. So we don't know what the interplay is going to be. I think it's important to evaluate where you are with respect to forgiveness with the current loan, and have that in the back of your mind is in the event that you do speak to your lender, and that you do decide to apply if you meet the criteria, again, whatever it may be, for a PPP 2.0. Another question is how long is it going to take to prepare the forgiveness application? It takes a long time. For those of you who have gone through and used the tools that have been out there, even so, again, speaking to what Steve said before, you need to calculate salary reduction on an individual by individual basis. You need to evaluate the FTEs. You have to look at each employee. So it is a very cumbersome process, and it is very time consuming. So for those of you who have been doing it all along, fantastic. Again, hoping that not much will continue to change, but again, we don't know. But for those of you who have, like I said, gone ahead and started to prepare, the timing requirement in order to do that. And then another question too is, how much documentation are the banks going to require? Will I be required to upload everything electronically, or will paper format be acceptable? We see some of the banks starting to release their document request lists. It is a fairly long list, basically asking for support for every number that's going to be on that application. So we do envision that a lot of documentation will be required to be supplied. Whether or not the banks look at every single piece of information, that's going to really be a question, for them. And I do believe that everything in the end will be electronically submitted through the portals. So again, from a borrower's perspective, these are things that I'm concerned about. Certainly, there is a tax impact as well that Todd or Steve are both going to probably discuss at some point. But again, putting myself in your shoes as the borrower, these are the things that I'm thinking about today. And with that, I'm going to pass it on to Steve, to Todd. I'm sorry, who's going to speak from the lender perspective?
Thanks, Josh. So we're going to talk about the lender's perspective, and this is from different sources, including discussions we've had with folks from the bank, what their perspective is about loan forgiveness. And just before I go through this, just keep in mind that the banks were kind of put in a position where they were required to do this. It wasn't like they saw this as a great opportunity to make money, although I know some people think that's the case, but in many instances, they're not making much money at all. So here are some of the things that the banks are saying or thinking. First, when will the SBA tell us that they will allow loans below a certain threshold to be forgiven by borrowers attestation only? So consider this. There's been a lot of discussion about the $150,000 amount, sometimes a little bit more, sometimes a little bit less. If you're a bank, do you really want to accept all these applications if the only requirement is going to be the borrower's attestation? And obviously, if you're the borrower, you don't want to do all that work and find out that it's just an attestation that's necessary. So a lot of banks are really waiting to hear from the SBA or from someone who's going to say, you know what, those $150,000 loans, they're going to be forgiven. They just need some type of attestation of the borrower. So that's one thing that's really been talked about by the banks. Second is one that comes across kind of strange, but I find it to be real. How are we going to be able to process all these loans? Do we even have enough knowledgeable people to get this done on a timely basis? Fortunately, most of the loans are the smaller loans. So if number one is settled, number two won't be as much of a problem. But yes, there is a need for bankers to get some help. I know they've been speaking to some of our firms, speaking to us about some ways that we might be able to help them. So that's an issue of getting the loans processed on a timely basis, making sure that the information they're passing off to the SBA is accurate, that they've checked information. The third one is there appears to be a lot of uncertainty still in the rules. And bankers don't like gray areas. It keeps them up at night. I mean, when will the SBA fill in the blanks so we don't get screwed? And that's on the side of the bank. The bank is concerned. Bankers are not known for liking gray areas. When you think of a bank, it's, based upon the size of the file. Theoretically, they want every area covered, but there's still questions. And I'm going to tell you that there's still going to be questions even after we get the final FAQs. So that's making some bankers a little bit nervous. And they are petitioning the SBA to provide more guidance. Fourth one is we have clients that want to file, but we and others are telling them to wait for more clarity and they're getting anxious and they're getting mad. How do we calm them down? So one of the worst things you can have is an anxious and mad client. And I know I've heard the stories from bankers and from you clients that you want to file, but we're trying to tell you to slow down and it's making you anxious. You want to get this behind you, and the banks are feeling the brunt of it as well. One of the things that they're saying that's possibly good is that when they have been able to submit the loans to the SBA, the banks, it seems that the process, the portal is easy to use. It only takes a few minutes to kind of send the information to the SBA. And they have 3 months to respond to that. But if you think about it, if you've been told that your loan's been submitted and you don't hear a word back for a while, that will make you nervous. So some bankers are saying, well, how quickly will the SBA turn this around? I mean, we know they have 3 months. Will they make it sooner? Because everyone's anxious to find out whether or not they are forgiven. So we're going to turn to Perspective next to Steve on the CPA's perspective. Steve?
Thank you, Todd. Hello, everyone again. So here are some questions that we as CPAs have been posing, fielding, and whatnot. But first, are the rules finalized? We've seen, we're at over 20 interim final rules, and these come out at not any specific given time. So we recently just saw a change to how owner compensation for S Corp and C Corp owners owning in excess of 5% of a company, how that would be treated. Related party rents as another example. So we see that the rules are changing. Some work in the borrower's perspective or in the borrower's favor, some do not. So again, and Josh raised this too, if the rules change, could I be negatively impacted? But we're still waiting to see if the rules are finalized. Another big question we get all the time is how will FTE reductions work if applying for forgiveness before the end of the covered period? There are instances where you can restore people by December 31st. Well, what if I've reduced people now, but I intend to bring them back by December 31st, but my covered period ends well before that? How does that impact my loan forgiveness? And that question is still open. A big one here, and there are differences. What are the financial statement and tax implications of applying for loan for forgiveness? And again, these need to be viewed separately. There is arguments that can say that it's a loan if you haven't applied as of year end, or you can say, well, I'm expecting for forgiveness for financial statement purposes. So there's an argument to be made to take that off from a loan perspective. So you're going to want to work with your A&A, your accounting and auditing counterparts on that just to make sure you get it right. And tax implications, if you don't apply for forgiveness next year, it's still a loan as of the end of 2020, and you deduct the expenses and then potentially include the forgiven amount in income in 2021 when you actually receive notice. So the timing can have an impact. Another big one, which Josh alluded to and we've alluded to on a number of occasions, is will loans below a certain threshold receive automatic forgiveness? 150,000 has been thrown out there. 100,000, will it be higher? And what impact can that have for people? As Todd said, most of the loans are below this threshold. So why go through this very voluminous process if you don't need to? So it may, again, be worthwhile to wait. And again, the PPP 2.0, which pops up its head, or other stimulus, will that come out? And how will that impact PPP 1? So do I need to apply for forgiveness for the first round of PPP before I can get another round if that does come into fruition? So a lot of open areas here. So, and with that said, we also have listed just the following questions that are still open and we're still waiting for guidance on. So just again, going to list them and go through them. Will the expenses be deductible for tax purposes? I had just mentioned that there could be a timing where you deduct them in 2020 and pick it up as a expense reduction or income in 2021. Well, it's possible that there's a ruling and there's bipartisan support on both sides that these expenses will ultimately be deductible for tax purposes, so it may not matter. How will the state tax jurisdictions treat the forgiven funds? Each state has different conformity to the Internal Revenue Code, but also could come out with their own specific guidance alluding to PPP funds, so we'll have to do that. How do you document FTE rehire exceptions? A big area. There are, again, I had gone through the safe harbors and other documentation whereby even if you have a reduction in headcount, there is a way to get around that and have it not impact your forgiveness. So how do I document that? We haven't seen complete guidance put out in that. The question I just asked is how will rehire exceptions apply if borrowers apply for forgiveness before the end of the covered period? Will the cost eligible for forgiveness be expanded? And perhaps that's something that comes into PPP 2.0. There's talk about having personal protective equipment, not to use too many abbreviations, but will PPP be able to be used for PPE? So that's something that's been bantered about. The automatic forgiveness, will there be new guidance? And again, this goes back to the rules. And lastly, will the forgiveness application, we've seen 2 rounds plus an EZ form, will it change again? Will it be made even more? Will it be simplified further? So definitely some open questions that are still out there. And with that said, I'm going to now turn it over to Todd, where he'll speak about the forgiveness tool and how we can help you when you do apply. Todd, take it away.
Thanks, Steve. So we've been talking in past webinars and also through different e-blasts about this forgiveness tool. It is something that is a proprietary software that would enable folks to not only input all the information, but also create the application for forgiveness. Now, I just want to make clear, it is a software that we're not giving to clients. We're licensed to use it, and we would work with clients or others who may not currently be clients to help them through this process. So it is really not just a tool, but the advisory services. So some of the features of the tool, nice thing is that you can manage your application in one place instead of being all over the place. It allows for forgiveness applications for multiple businesses. I know some folks applied for more than one business. You can do bulk upload of information. You can directly input payroll values from authorized payroll reports. You can preview the 3508 form before the signature. Also, you can take it a step further. There's instant verification of payroll, utility, and bank account transaction data, which is available through secure integrations to trusted third-party systems, and it creates a zip file with all the information that can be sent to the bank. So now I know some of your questions are, well, aren't the banks going to have their own portals? Aren't they going to want certain information? That's true. But what this software will do is it will at least help you to really get all the numbers together, see where the issues are. You can review the application before it's submitted, and through this particular software product, it will, with some of the banks, be readily accepted, and some of the payroll companies, the information will be very easy to upload. So it's something that we do have available. We are waiting for some of the kinks to get out of it. But if you are interested at all about this, concerning this loan forgiveness application tool, please email COVID-19@sacsllp.com, and in the subject line, so we know that it's not a question, if you could put application tool, and from that we will reach out back to you and perhaps set up a conversation to explain more about how this works, what are the fees associated with this, the timing, etc. So someone will get back to you, COVID-19@sacsllp.com, with application tool in the subject line. And with that, we are going to end our broadcast. We will have another recovery update on COVID-19 loan options and forgiveness strategies. It's to be determined. I think we're trying to push this out every other week at this point, because obviously there's still not a whole lot of information that's changed, but we will probably at least have this every other week, or maybe a little bit longer than that. For more resources, please send us an email at COVID-19@sacsllp.com, and check out our resource center, the COVID-19 Resource Center, which is on our website, sacsllp.com, to register webinars and for ongoing information and resources. And with that, I'll bid you adieu. Have a great day. As Steve said earlier, it's a beautiful day. Get out and get some exercise and see how this wonderful weather is. And we'll talk to you next time. Folks, take care.